can see my chart. Perfect. Okay. Everybody can see my chart. Hear me okay before I get started? Just give me a quick yes in the chat and then I'll start. Perfect. Okay, cool. So, solid week overall. Um, Run through some of the higher time frames first, what we've been seeing lately. Gold traded above the highs, okay, providing us that bearish move back down. Ends up trading into these lows, okay, going bullish. And then we ended up having this high marked out early week, okay, which I ended up it did respect, okay, running that inducement high, respecting the liquidity block at the high, and moving away. So now, higher time frame wise, we're starting to leave liquidity kind of on both sides of the market, right? You can see also down here, we've left lows intact, okay, and more of like an intra-week perspective. Left lows here, okay. See how we respected the lows to the left, moved away, leaving that liquidity. Okay, then moved to the highs, ran the inducement high, and then respected the actual structural point up here, moved away, leaving us liquidity up here. So that's why I've marked on this high, just like this. And then coming back down to the lows, running this internal point and going bullish. So what do I expect to happen right now? I have no clue. And the reason being is I'm not a magician. I can't always tell you where price is going to go. So what I simply do is just wait. Okay. We have liquidity on both sides of the market. What is the best thing to do right now is literally just wait. If you are trading gold, it's going to be more of an intraday perspective. Okay. Taking it day by day kind of thing, because for me to build a higher time frame bias in direction, it's not that possible right now because we're starting to leave lows to the downside. We've left highs. Okay. So I need to see some sort of side ran, whether that's going to be the highs, whether it's going to be the lows, and it'll give me more of a confident bias. Okay. When we've left lows and when we've left highs, I can't really build a bias. Okay. How am I going to pinpoint which direction it's going to go? Right. I kind of be guessing. So for example, when I say just wait, this is very important because if you are forcing trades on gold and you don't have a confident bias, what happens is you'll simply just start having like toxic trade management. Okay. So you'll take an entry, it'll go in your profit and then it'll come back a bit and you'll be like, you know what, maybe it's actually going to end up going bearish or it's going to end up going bullish. You'll second guess everything. When you're not confident in your direction and your bias, you will bring on very toxic trade management. Okay. Rolling stops too early, going break even too early because that fear is going to creep in because the confidence is not there. So all this is chain reaction. And then if you overtrade or break your rules when your confidence is not there, it's going to lead into the next day. It's going to lead into the next week. So that's when like patience is so important. All these things, it's like a chain reaction, right? If you have, let's say Monday, Tuesday, not a lot of good trades. Then Wednesday comes and your approach to Wednesday is like I haven't traded Monday, I haven't traded Tuesday. I want to be in a trade Wednesday. And then you have like a blow up day on Wednesday, but there wasn't any good trades. Thursday comes along, you just blew your account Wednesday, and then Thursday finally has a textbook pitch perfect trade, but you already just screwed yourself over because you weren't staying patient. So like these things are so important. Staying patient, okay, following your rules. Because if you don't and you fall off, it'll just be a chain reaction going forward to the following days, again to the following weeks. So like I said, gold. I'm currently sidelined right now on this pair. Like I said, we've left liquidity at the lows, we've left liquidity at the highs. If you are looking to trade this thing, it's more going to be on a intraday perspective. And what do I mean by that? Check this out today. Gold had a nice long in New York. But again, once this long happens and my intraday targets hit, that's it for me. So simple and easy. Took a low out, left a liquidity block. Okay. And then we moved higher. Look how we've taken out this high, printing us a new high in the market. Market comes back down, respects the lows right here, move away. Since we've moved away, where do we have liquidity now? Right here. Perfect. Okay. And then from there, we move higher. We actually even take out the high again. induce higher again. Then price sells off rapidly, quick, running this level here, where we've built the liquidity at. Just like this. We've respected that area, moved away. I don't know why my shit always does that. Respect this area, moved away, induced higher again once more. Okay, printing us that new high, that new structural point. Then we get that rapid sell-off, grabbing that liquidity. Okay. Overall, this is the difficult part here is you would have had to refine it because the whole swing low, the whole liquidity block on like a bigger perspective being this low down here. Let me just draw it on correctly so it makes more sense. Since we've swept this low here, this whole area is a liquidity block. So if I was to take this entry just like this, right, to the next high, or sorry, back up to the high, it's only a 1 to 2, right? So I would have to refine it in some way. Entry wise, like you have some sort of a liquidity block there, so you could tuck your stop there. It's not the cleanest, but it does give you a more refined entry. Not my favorite entry, okay? But directionally speaking, which is the most important here, is what's important, okay? I'll even go on the M1 so it opens it up a little bit more. But the important part here is price gives us that liquidity block, which is the trap move to the downside, grabbing that buyer liquidity, okay? We move up. Now we want to see a build up in the market. Boom, build up in the market. Buyers are in the market here and here. Stop losses below this low, and that's why we hunt that. And that's where we take our entries, right here. And where are we going to target? Back up here. Why are we targeting up here? Since we've taken out this low and this low, who is now looking to sell this thing? Or sorry, who's looking to take entries now? Sellers. They're going to be looking for entries up here. Maybe over here. That's why we stalled here for a bit. All these imbalances. We stall here for a couple of minutes at a time, like over here for a little bit, over here for a little bit. And even at the high, we get a false reaction, right? High to low, grabbing something over there, and then continuing higher to trap those sellers out. But these are the entries you want to be looking to take. Okay. Unfortunately, entry-wise speaking, the low is all the way down here, so it's harder to take this. But the importance is I want you guys to understand why we take this trade, okay, and the direction behind it. But yeah, this is what I was speaking about. Examples were gold right now because this is just like an intraday based trade. I don't have a higher time frame direction at the moment. We are going bullish, so maybe we continue bullish. But I'm sidelined higher time frame wise on gold right now. Okay. And when I'm sidelined on the higher time frames, I'm most likely going to be staying out of the pair completely. And I'll be looking at something different. So as you guys saw, I took euro today, for example. Okay. So there was a buildup as well at the top to target. Being where? Up here? There was a build H1 liquidity block. Are you talking about from the left-hand side over here? Yeah, like here. Perfect. That's nice. Yeah, because this whole area is a liquidity block in the lower time frames, right? So that's why we respected it and went bearish for a bit. Perfect. But yeah, that's gold right now. Like I said, higher time frames. I'm chilling, and I'm not worried about it right now. When we start leaving liquidity on both sides, that's when you got to start being patient, not forcing those lower time frame setups. Okay, because remember, if the higher time frame is not correct, it does not matter how good your lower time frame breakdown is, how good your entry is. If the higher time frame isn't there, your lower time frames will get disrespected all the time. Yeah, longs came before taking the high, so it was more comfortable. Yeah, exactly. Perfect. Euro. Clean. Today. Honestly, even this week after the lows were taken. So again, let's start off on the higher time frames. Look what Euro's been doing so far. Grabbed liquidity to the left. Okay. And that's what's fueled our bearish move this week. Okay. So if I go to the hourly, I remember at the beginning of the week, everybody was waiting for, I think we were trading within this area. And I was just saying, I don't see liquidity yet. Right? Like when we were right here. And I simply said to you guys, People are asking like, oh, does this look good? Like, should I take this entry? I'm like, guys, listen, I don't see anything right now. I don't see liquidity built in the market. So why would I look to take any trades? Right. So I simply said I wanted to see this low respected. And then if I exit out of replay, look what we did. We built liquidity. Cool. Look how much easier it gets once we build liquidity and take it out. And when we go bullish, like it's just so much easier after that. Just wait. Simply wait till there's engineered liquidity in the market, and bias and direction, it becomes clockwork. Okay, rinse and repeat type of thing. So from beginning of the week, Tuesday, all the way till Thursday, we built liquidity. Okay, this is like almost 2 days of price action, building liquidity at this low. We go bullish to take out, I believe, this area over here, and look what happens here. Previous high taken out, printing a new high, buyers induced. Okay, then we go bearish, respect these lows, break this high, printing a new high. Buyers induced, my bad. All of this becomes liquidity now. This is all buyer liquidity. Every time we take out a high, buyers are influenced. They're induced to get into the market again. We're printing new highs. We're trending bullish. Let's keep entering buys. Okay, leaving all of this liquidity. Look at these lows. Oh my God. Finally, we run that high. We start breaking down. We get a false reaction up, taking this out. And then finally, trap move. Boom, boom. Grabbing all that liquidity that was induced below here, all on purpose. Okay, this is all done on purpose. It's all a buildup in the market on like a higher time frame perspective. Because don't forget, again, from here to here, that's 2 days of price action. Finally, we take this out. Look how much easier it is to read now that we've taken out this low over here, this liquidity. I'm full bullish. Okay, until where? At least here. This whole area here. And why this area? Well, since we haven't really respected this area, we can expect reactions to the downside. And that's exactly what happens. Look. The market gives us a false sell-off, okay? Running internal liquidity, aka buyers liquidity, okay? Look how buyers are getting in the market here. We take out a new high, and then we eventually return back to that low, respect it, move away. Liquidity, same thing over and over, okay? As soon as we move away, I'm grabbing this low because now I know there's liquidity down here. The market's going to want to hunt for that, okay? We induce higher again. Return back to this area. This is all traps. Okay, look how we even get like this is on the 15-minute. If I go to the 5, the market gives a false reaction over here. Okay, what's this? What does the retail see that as? This high here. We take out this high. What is that? So think about it from retail perspective. They get reaction from this POI to the left-hand side. They're like, cool, I get my reaction. Now I want price to take out this high because it's their confirmation, right? Now that price is taking out this high, they want to see price back down to their discounted OB in the at the low, and they're buying down here. And they want to see price back up, right? We want to see all that happen. We literally want to see all that happen because then we understand that buyers are inducing the market now, and that is just building even more liquidity to the downside that should get hunted. Okay. Not only does that happen, but look, before we take the lows here, before we take the low, look at this liquidity we built on the way down. Okay. This is the reason, this is that reason for us to end up going higher. That, and also don't forget this high respected this high. So we're going to want to see this high probably taken out as well. And maybe not 100% this high, but at least the structural point again. Why the structural point? Okay, we've taken out lows here, this low over here, and then finally this low, sellers induced. These are areas sellers are looking to take entries from. Same thing. Mark this out as a red box. Look how sellers induced here. They're getting in the market. Market stalls here for a good, like almost an hour, 45 minutes. Okay. Think of the retail psychology. Okay. It's hanging out in their POI for an hour. every time there's a rejection, maybe they're adding more volume. Okay, that just gives us even more of a reasoning to long. Okay, not only here, and then finally the extreme didn't get false reactions, but there's still an area that's going to be trapped. This is our target. Boom. Okay, at least pay yourself here. If you don't pay yourself here, it's not the smartest thing to do. This is a structural point. Okay, so at least take off a little bit of volume here. Perfect. Let's digest the entry a little bit more over here. Okay, so remember why I marked this low. If I look right below this liquidity, what did we leave here? Liquidity block. If I go on to 15, you can see how we printed this low and then we moved up, okay? And then came back down and swept that. Never returned back to this area. Okay, all we did was build liquidity here. This is all done on purpose. We built liquidity right above a liquidity block. It's perfect. It's what I want to see. Follow along with price. Wow, did you look at that? We respected the liquidity again. We respected the lows again and gave. We broke another high. This is giving retail one more time to try and get in this trade. They're buying here. Okay. Look, we stalled here. Again, look at these rejections. This is all done on purpose to screw over retail. It's just building liquidity. Stay patient. Okay. Finally, they get trapped. I think it even comes a little bit lower. Perfect. Comes into, I believe, this refined area. I didn't take my entry off this area, but you can see how this little liquidity block, I believe it respects it. Moves away. Yeah. Okay. So now I'll top on the lower time frames a little bit more so we can understand why price runs to this area here. Okay. So let me leave this just like this. Someone asked in the group, isn't this like, or where did you mark? I believe here or something. Took out that high. Something you have to understand is we just took this out. Okay. Price came down, respected this whole area. All right. Even gave us a false reaction up. And then finally, after this low was taken and the low to the left, buyers are now trapped. Was it GU? Okay, I'll go over GU after as well. But even this high taken out, could see it as a bullish BOS or whatever. Since we've now taken out this low, these are all going to be areas that are going to provide false reactions. It's all going to be traps. Here, maybe over here, up here. These are all going to be traps. Okay. And anytime we get reactions, it's just going to provide us an opportunity to buy. Obviously, with our confluence. So look what happens here. We take out that high, print a new high. We return back to the low, respect it, and move away. I didn't say anything about internal structure. Understand what I'm saying. Look, high taken. We return back here, respecting this area, move away. Where do we have liquidity now? Since that we moved away from this area, right here. What's right below that? Liquidity block. Why, you have to ask yourself, when we're trading right here, and you're looking to take an entry, where is the liquidity right now for us to take a buy? We just literally respected this false area, structurally speaking, leaving this low. This is your entry right here. Stop below your liquidity block, okay? Because buyers are entering positions here. We want to see them get trapped, and we have a perfect liquidity block right below as a confluence for it to get respected and move away. And boom. Moved away. Perfect. Where can we target? I posted some screenshots of how I managed my trade. I had inducement high marked as a partial point. Why? Because sometimes we'll come up, run the inducement high, and we'll see a pullback, and then that continuation up to that structural high. And that's just, sometimes it happens. So I'm okay with removing a little bit of volume up here. Okay, just in case we see that pullback. And then we should see that continuation back up to the high. Okay, so that was my first partial point here. I took 10 lots off here. So we'll play this out. Boom. 10 lots off here. And then honestly, my target ends up getting hit, which is fine. My other target gets hit here. I remove another, what did I take off? Another 10 lots. So I left 10 to run. So I removed over almost 70% of my position after this high was taken out. Okay. And now I am holding the rest to here. After this is taken out, I'll probably be like 90% of my position. Reason being, because if we want to respect retail overall in the higher time frames to continue going bearish, we will sell off up here. Okay. So I understand that. So I'm okay with paying myself over here. Or if we just end up seeing some sort of bearish move, maybe we come all the way up here. Okay. Go bearish to take out all of this. And then maybe we continue. Who knows? All I know is that we could get some sort of bearish reaction up here. So I am going to pay myself accordingly. Okay. I'm not a fortune teller. I don't know where price is going to go all the time, but I understand where price can react from. And I pay myself accordingly from these highs and lows. Okay. Let's see what we're trading right now. So I believe we ended up going bearish a little bit back down to take out some internal here. Perfect. No worries. Could simply respect retail. What do I mean by that? We took our new high out. So this could be areas that buyers are looking to get in from. So it could go bullish like we were talking about. Take out that high, leaving liquidity, and then maybe we sell off. Okay. So these are things I'm going to stay aware of. Other than that, my long position, I will be partialing the rest of my position above this high. Everybody understand EU from today? Honestly, textbook clean. Can't get any more cleaner than this. This was perfect. That's what we want to see. Good. Any questions on Euro? Please let me know before I move on. I'm probably gonna go to GU. Look at GU. Fire, yeah, brother, it was fire. You smashed Euro as well. I love to see that. These are the trades like I like adding volume to. I think I had like 30 lots running at one point. I had 20 at the extreme, and then I added 10 more at the pullback. So 30 lots on this guy. Not, I mean, half as good as Abbott, right? This guy will add friggin' 60, 80 lots on positions. Like it doesn't even care. No fear. Maybe one day I'll get there. Yeah, I have one question. Talk to me. What's up? Can you speak through the mic? Sure.
Hey Marco, can you hear me?
I can, brother. What's going on?
What's going on? Yeah, I had a question. It was from EU yesterday, London session for me. Yeah, right there. Can you go maybe to the 15-minute?
Are you talking about London from today?
No, from yesterday.
Thursday here?
Yeah, right there, yeah.
Okay. 15 minutes, you said?
Yeah. Can I annotate on your screen?
Yeah, of course. You should be able to.
Oh yeah, okay. Yeah, so we swept an area of seller liquidity right here, right?
Yes, let me mark that out for you.
Oh,
So yeah, we ran this area here.
yeah, exactly. And we left buyers in the market right here.
Yep.
So I saw this live when price was right here, but I considered of taking the trade because we also had a buildup of seller liquidity like up here.
Okay.
So I didn't know if I could take the trade, yes or not. So yeah, do you maybe have a tip for me in the
Okay,
future?
so your first, I heard you say no. You'll never know. Okay, so that's why we have all of our confluences. And you have to be able to accept the risk when you're able to take this trade. Now, does it make sense to short from here? For sure. Okay. We've grabbed all the highs, structural points over here. We have liquidity to target. Okay. We're trading within London session. And that, if I believe, I actually haven't looked at Euro this day, but I think there was an entry.
Yeah, there was.
It was, right? Yeah. So actually, even before this, I believe or was it? Yeah, right here. We left, I don't need, did we run those lows or just leave equals? We left equals there to target. Perfect. And then when we run the high, okay, we induce higher once more. Then price comes down, respects the low. This is my favorite type of setup. Respect the low, move away. Okay. Since we moved away, we now know that buyers have entered positions over here. If I go to the one, let me explain why first, because people always ask, but why am I going to the 1 minute here? I'm simply going to the one because if I look at this price action, it's simply squeezed up. Okay. So I'm going down a time frame to just open up price action to just make sense of what's going on here. Okay. Nothing too complicated. Go to the 1 minute. Just to now see how it opens it up and it makes more sense now. I can see that we've left liquidity where? Right here. Does that make sense, Tom?
Yeah.
So we've left internal there, meaning when we took the high over here and we started moving towards the downside, look how we purposely left seller liquidity on the way down. Took this low out, price came back up to this high, respected it, moved away. We have high, liquidity up there. Look how we even come down lower, induce lower once more, return back to the highs, move away again. There's liquidity above this high. And what do we have right above? Boom. Liquidity block. So how can we take this? One entry would be as soon as that liquidity is taken and stop above the liquidity block to the left-hand side, just like this. And I believe on the 5 minute. So that would be entry number one. On the 5 minute, you would have had to take the start of the 5 minute imbalance is right there. So I always talk about it with you guys. There's a couple different ways of taking trades with like when we're in the imbalance. You have the start right here. So this high. You have, I can mark it out, the 50% if you want to use that sometimes, which ends up working. And then you have the actual tap over here, which doesn't work this time. What I do is I just take the entry as soon as we tap in. So when the liquidity is taken right here, boom, stop goes above, liquidity block, boom, and then wherever we're targeting. So honestly, the easiest target would have been down here. Just like that. You have your extreme one over here, and you have confirmation one right beside it. Both work. Does that make sense?
Yeah.
Perfect.
So it was a very clean trade after all.
Yeah, honestly, even the lower time frame entry was perfect. Like this is textbook stuff. Where was it? Right here. This was textbook stuff right here. We run the high, we come lower to respect the low and move away to induce those buyers. Okay. Return back to the high. If you didn't have a chance to get into the extreme right here, that's fine. You wait for that reaction back down. After we run those highs and return and move away from it, we've now left liquidity block. So this is an area we can take an entry off of. Appreciate you, Mark. You're gonna finish recording once it's uploaded. Have a nice shift to get to. No worries, brother. No worries, no worries. Hope you have a good shift and a good weekend. We'll talk soon. But yeah, does this make sense, Tom? All good?
Yeah, all good, man. Thank you.
No worries, brother. Perfect. Perfect, guys. Okay, cool. So that's Euro right now. Let's take a look at this guy on the higher time frame, see what's going on. So like we were talking about in the trade, the long I took, I do believe we will still return up here. So I'll leave this high up. 109.334 should be seen. Could see bearish reactions after. I won't be trading it. And the reason being is because since we've taken out this low, this will be trading with retail. I'll let the reaction occur. If we do trade up here and move away, I'm not interested in sells. Okay. If it does happen, cool. I won't be trading with retail because it's low probability. Okay. So again, if we do get the reactions, cool. But I won't be taking these sells. I'm up here. So I'll leave a little red box. Cool. So perfect. That was Euro. Clean stuff. Again, very, very important to see this buildup occur. And that's what I said at the beginning of the week. I don't see any liquidity. So there's no reason to be taking any entries. I wanted to see this low taken after we built liquidity at it, which is perfect. 108,928. But yeah, perfect. Okay, so now GU also so clean. Yesterday and today, like beautiful, beautiful stuff. Okay, cool. Let's go to the higher time frames. So we ended up trading into this liquidity block area. Before, look how we left this high. Price comes up, takes the high out. We're going to the 1 hour so we can open it up a little bit. We take this high out. What does that tell me? Buyers induced. Trap area. And coincidence, look how we get a false reaction up to take out internal liquidity left. That's seller liquidity left. All right. And then we have a nice setup. I believe that happened over here. Where is it? Yeah, here. Takes out lows. Price takes out lows. Okay. And I believe I put this in the Discord. And then what do we have above here? We want to see price trade above this high. Why? Since we've taken out lows, sellers are induced. I'm going to draw all these areas on here. You have an area over here that we end up respecting for a little bit. Honestly, all of this. See how we stalled here for, oops. See how we stalled here for quite a bit of time. 2 hours, almost 3 hours, we stalled here. Why? We took out this low. Sellers are going to be looking to take this thing to the downside. And then also over here, we want to see this high taken out because then we know sellers are trapped. And what do we have right above? Boom. Perfect. We see liquidity taken, trades into a liquidity block. Here's our entry. As soon as the high is taken, press that sell. Tuck your stop above that liquidity block. I know someone ended up putting their stop right above this wick. Not wrong, just a little over refined in my opinion. I would have just covered this, no problem. And gorgeous target being down here. Perfect and clean 1 to 4 to the downside. Everybody understand this short? This was clean. And like, look at the engineered liquidity that we got here. Again, took out the high, return back to the low. This is just a trap area. False reactions. We move away. We have liquidity down here now. Perfect. We short into that. What ends up happening after that is we continue lower. And let me mark this on. We take out the buyers here. Perfect. So trap the buyers. From here, this is what I talk about letting price develop. Okay. So we just took out a higher time frame low. This was Tuesday in New York. Tuesday, all we did was just build liquidity. Tuesday and Wednesday. Look how we print this high. We come lower, come back to the lows, respect the lows, move away. So now we have liquidity at the lows. Okay. And then we end up taking out this high, printing a new high here. What does that tell me? Buyers induced. Look how we return back to the lows and move away again. That's because we've taken out this high. So they're going to think BOS or whatever it is. Okay. And again, return back to lows, move away. Finally, we come down to the lows and we trap the buyers, grab that liquidity. This is the entry I ended up taking on, was it Thursday? Yeah, Thursday. In New York. Yeah, London ended up printing that low here. And then we move higher. Look, oh, sorry, even before, sorry, we took this out. Check this out. We take this low. What does retail see that as? BOS. And purposely, the market respects that retail, right? BOS return to their extreme and move away. Liquidity above this high. Perfect partial point or even an intraday target. Okay. I want to be buying into this. We come down, trap the buyers. Perfect. Then we move higher. Look at this buildup of liquidity we got on the M5. So again, like I usually talk about, this is really squeezed up. Pop down a time frame. Look at this massive buildup we get here. If I even try, I'll try to mark up everything. But look, we take out a high, we move higher, print a new high. Price comes lower, respects lows. Then we print a new high, come lower, respect lows, induce higher again. Okay, return to the lows, respect and respect. Finally, we take out internal, major sell-off to the downside. what do we have at the very, very bottom? Liquidity block. I simply put this blue box here. Why? Because this was the last low. So I want price anywhere below that low. Why anywhere below that low? Because anywhere below here, 1.26708 is an imbalance. So realistically, it could have came here and then went long. It could have came into the extreme M1 and went long. Obviously, in this example, it ends up coming right all the way down to the extreme here, filling the extreme and then going long. But I don't know what's always going to come there. So I'm okay with always taking my entry like this. Okay. Stop below. You can open it up if you want a little bit of breathing room, no problem. Target. Just like we were speaking about before the entry. Boom. Okay. Same thing happens here. Since we've taken out all these internal points here, all these lows, retail sees that as BOS. Is it a coincidence that the market gives them a false reaction? Okay. Not only a false reaction, but check this out. So market reacts off their POI. It even gives them another BOS to the downside. Where are they selling from again? Here. They get trapped here. They get trapped here. And finally, up here. Make sense? So entry-wise, again, boom. Let's be realistic here. No need to wait for the M1 extreme to get tapped. That's ridiculous. Stop below. Target. Okay. We end up running higher per higher time frames. Let's check it out. Which is fine. You could have literally partialed like 80, 90% up here and then held the rest up here. Both work out perfectly. Okay. Again, I'm not going to be that unrealistic person. A lot of people talk about the industry of like, oh yeah, like easy 1 to 10 up here. Not a lot of people can hold a 1 to 10 full volume all the way up here. So, I mean, this is more than enough to pay yourself. It's a 1 to 6.5. Okay. Anything over 3 times your risk is beautiful. I don't care what anybody says, especially when you're trading the big counts, 100K, 200K, 300K. You make 3 times your risk, you're chilling. So again, partial point up here, and you can hold the peanuts to the more higher time frame target up here. Now today, clean again. Same thing over and over, guys. If I go to the 5-minute works here, fine. This is all a buildup of liquidity. The market builds liquidity through, what is it, Thursday, end of Thursday, through Asia, through London, and then finally London starts selling off to trap the buyers, okay, to grab all that liquidity, to grab that buildup. This is what you want to see. You want to see that buildup of liquidity here. Look, high taken, return back to the lows, move away. High taken, return back, move away. High taken, return back, move away. There's just all this liquidity here. All right, so I grabbed this low here. You can even look on, I believe on the 1 hour, it's like an imbalance here, just like this. Grab that low. Let's look on the 15. It even taps into this imbalance over here. You can see my cursor. 5-minute. Perfect. Look at the price action on the way down. Same thing occurs. We take out this low. Oops. Take out this low. Price returns back to the extreme. Respects retail. Moves away. Perfect target now. Oops. We got liquidity above these highs now. Okay. We moved away. Now look at the price action on the way down. You got like all this trend line liquidity left. Oops. Trend line liquidity left, like here. Okay. All this. You have some relative equals over here. Some more trend line liquidity here. And then even before we take out the lows, more trend line liquidity left here. Perfect. So finally, we take the lows here. Okay. Price goes long. Takes out some internal high. Okay. We're not looking to buy this thing right now. The next point of liquidity, you can see it's just literally an imbalance, is down here. And that's exactly why we build liquidity, run for the lows again, provide us a liquidity block since we've taken out this guy. Okay. Liquidity block down here. This whole low is a liquidity block. Perfect. Now we want to see what? A build up in a run of the buildup and tap into our liquidity block. Simple stuff. Build up. Okay. Run of the buildup. Mitigation of liquidity block. Boom. There's a long entry. This is screaming long. Okay. So let's mark this on here properly. We got high, low, high, low, move away, high, low, move away. Screaming full port, literally. This was perfect. Build up a liquidity. We induce higher. Where's the liquidity now? Where are the buyers? Right here. Now, again, there's a couple different ways of taking this. I could grab the imbalance, and it works here. Doesn't always work. Okay. Sometimes it's a little more over refined. So I could grab this imbalance. I'll simply just grab the liquidity being this low. Okay. Drag it over. I want price below it. I'll press buy as soon as it's taken. Where's my stop going? Below the liquidity block. Perfect stuff. Where am I targeting? Look at all this. You have all these internal points up here. If you're not comfortable holding all the way to the high, you have these internal points you can start taking partials at. Overall, back to the high we go. Boom. There's another 1 to 5. I saw it, but I didn't take because I thought taking that high to the left would make the build up invalid. No. Look at the bigger picture here. Since we've taken out this, these are all areas that are going to be provided false reactions. If we got reactions here, it would have been false. Just like up here, look. False. All to build liquidity above here. Nice, very nice. Even here, look how we get the false sell-off to grab internal. This is going to be traps. Trap here. Trap here. And then finally, target hit. Perfect. So clean. Everybody follow? Makes sense? Makes sense. Perfect. Now, I'm going to be making, you guys saw my message in the Discord. I'm going to be making like an in-depth step-by-step video. Nothing's changed. It's not like I'm holding a golden key, but I'm going to be making a really in-depth step-by-step video on like my favorite setup I like to take all the time. Again, nothing's changed. It's not like I'm holding anything back. You'll see once I make the video, it'll all make sense. But like, I'll make it a very clear step-by-step process. To make it as easy as possible to understand. Like, it won't get any easier than this. I don't know what to do after this. But yeah, jokes aside, it'll be a good video. I'll record it probably I don't know, tomorrow or Sunday. It'll be this weekend for sure. But I'll get that. I'll let you guys know in the Discord when it's all recorded and uploaded. But yeah. Other than that, any questions? Let me know. Let me know. Good price action this week, honestly. Let me know. It could be, again, I always say chart related. It could be psychology related, like how to approach challenges, funded. So let me know before I wrap up this call for the weekend. And maybe do what Charlie's doing. This guy looks half dead on my bed right now. No, nothing. Okay, I'll take that as a good thing. Hopefully it's a good thing. I hope you guys enjoyed the webinar. I joined in 5 days. 5 days ago. You guys are awesome, man. I love, appreciate that. I love that. Let's go. Only the beginning. I'm always trying to make things easier and better for you guys. Whatever I can do. But yeah, you've been here for 5 days and you love it so far. I love to hear that. That's great. Be safe, my brother. You too. Appreciate you. The rest of you, I hope you guys have a safe and good weekend. Continue working, continue doing your thing. And yeah, I'll see you guys back on the charts Monday. Alrighty. Have a good weekend. Appreciate you. Have a good weekend, guys. Appreciate you guys. It's really easy to understand. You guys are objective. Thank you for the time. Appreciate you, man. Appreciate you. Okay, guys. Take it easy. Ciao. All the best, and we'll talk soon.